All right, let's talk about swing trading. It's a strategy that's all about finding real opportunity in the market's ups and downs, not just trying to survive them. If you've been looking for that sweet spot, something that's not as slow as long-term investing, but not as insane as day trading, then you're in exactly the right place. Let's get into it. So to really get why we even need a different approach, we have to rewind the clock to the 1990s. This was a huge long-running bull market. Seriously, you could pretty much pick a stock that had even a tiny bit of promise, buy it, and just wait. Timing? It didn't really matter all that much because almost everything was going up. It was one of those times that made investing look way too easy. So here's our game plan for today. First, we're going to look at why those old buy and hold rules just stopped working. Then we'll get crystal clear on what swing trading actually is and the tools you need to do it. And finally, we'll walk through a disciplined master plan that's designed to take all the emotion out of your decisions. Okay, section 1, why the old rules fail. Because, after that amazing run in the 90s, everything changed. The market shifted, big time. And the strategies that had been working for years and years suddenly became a huge problem. Back then, the market was really dominated by two extremes. Think of it like two totally different camps. In one corner, you had the buy and hold investor. These are the folks who really dig into a company's fundamentals, plan to hold on for years, and they make very few trades. In the other corner, the super fast day trader. They couldn't care less about fundamentals. They're making tons of trades a day, trying to scalp tiny little profits, and they're out of every position by the end of the day. And as we're about to see, the market was about to hit both of them hard. And then it happened, right after the year 2000, that historic bull market. It didn't just end, it slammed on the brakes. The buy and hold crowd, they watched their portfolios just get crushed. And the day traders, the predictable little up and down moves they depended on, just disappeared. This was a fundamental shift, a real sea change in how the market worked. So if both of those strategies blew up, what's left? Well, this is where swing trading comes into the picture. It's not some brand new idea, but it's built for a more volatile market like the one we have now. The best way to think of it is as a kind of hybrid, It takes the best parts from long-term investing and from day trading. So what is it exactly? Well, think about it. Stock prices almost never move in a perfect straight line. They zigzag up and down. Swing trading is a strategy built to profit from those short-term swings, those little waves that happen inside of a bigger main trend. You're not trying to ride the stock for years, you're just trying to catch the profitable waves along the journey. But let's be super clear on one thing. A swing trader does not bet against the market. You never, ever fight the main direction of the market. The whole point is to trade with the major trend, whether it's going up or down. You absolutely live and die by that old saying, the trend is your friend. Okay, so if you're going to ride these waves, you kind of need to know where they're likely to start and stop, right? And that brings us to our essential tools. This all comes down to two of the most basic but powerful ideas in trading, support and resistance. First up, we've got support. The easiest way to think about this is as a price floor. It's a price level where, in the past, buyers have consistently shown up and started buying the stock. At that point, demand starts to get bigger than supply, and that tends to push the price right back up. And the exact opposite of that is resistance. If support is the floor, then resistance is the ceiling. It's a price level where sellers tend to take over. You got people who bought lower taking their profits, and you've got people who are just happy to sell and break even. At this point, supply is bigger than demand, and the price tends to fall. Okay, this brings us to the real heart of it all, a disciplined master plan. The goal here is actually pretty simple, but it is so powerful. It's to create a mechanical, rules-based system that takes your two biggest enemies, fear and greed, completely out of the equation. It all starts with picking the right stocks to trade, and the master plan has a very strict, non-negotiable checklist for this. You're looking for stocks with a beta of 1.3 or higher, which just means it's more volatile than the overall market. You also want a price over $12 to get those meaningful swings, and a daily volume over 500,000 shares so you can easily get in and out. See? It's not guesswork, it's a systematic filter. And the trade itself is broken down into 5 simple steps. First, find a stock in a clear trend. Second, you wait for a little pullback against that trend. Third, you get in based on the plan's strict rules. Fourth, and this one is absolutely crucial, you immediately decide where you'll get out for both a profit and a loss. And finally, you manage your risk every day. It's the same repeatable process every single time. So let's talk about the numbers. The plan defines your goal before you even place the trade. Your first profit target for any trade is right around 7%. This is how you fight greed. You're not swinging for the fences hoping for a home run. You're systematically going for a solid, achievable gain, and you have an order sitting there waiting to take it. And now for what is honestly the most important number of all. This is how you beat fear and protect your money. Your maximum loss on any single trade is 4%, period. You put in a hard stop-loss order, and if the trade goes against you, you're out. No questions asked. This is what ensures that one single bad trade can never, ever devastate your account. And that's really the whole philosophy in a nutshell. The master plan isn't about having a crystal ball to predict the future. It's about being disciplined. When you set clear, mechanical rules for getting in, for taking profits, and for cutting your losses, you take that whole emotional roller coaster out of the picture. You're not trading on hope or panic anymore. You're just executing the plan. So let's wrap this all up. What are the big takeaways here? Well, the market is just different now, and it demands a new approach. Swing trading is that perfect hybrid that captures those short-term price swings. It's built on classic tools like support and resistance, but its real power, that comes from a disciplined master plan with strict rules. At the end of the day, success comes from following a process, not from trying to predict the future. And that kind of leaves us with one final question to think about. In a world that is just full of experts trying to predict every single turn in the market, could it be that the real key to success is actually something way simpler? Could it be that a disciplined plan that you follow religiously is far more powerful than a perfect prediction ever could be?